All right. Hey, everyone. And thank you for tuning in to another episode of the Sage Investor webinar. I am your host, Jen, and I'm joined by one of my partners from the Sage Investing Group, Maggie Chung, today. For those who don't know us, my partners and I, including Lana, who is not able to be on our call today, we are all former Big Four auditors turned full-time multifamily syndicators. Our main mission is to really help empower other risk-averse investors, much like yourself, diversify their portfolio into cash flowing and appreciating assets such as apartments. So if you're interested in learning a little bit more about what we do, feel free to schedule a call with me on our website at sageinvestinggroup.com. Now, I'm excited to get started, so let's go ahead and get started with our webinar today. We are very excited to have Rafi Mizrahi join us.
Don't worry about it. Don't worry about that.
How do you say it properly, Rafi?
So Mizrahi.
Mizrahi.
It's hard, yeah.
I'm very bad pronouncing other languages. So anyways, excuse my pronunciation, but we're really excited to have him join us as our guest today. Just a little story about Rafi before we jump in. Prior to meeting Rafi in person, I have to tell you, I heard so many incredible stories about this guy and how he was able to defeat so many odds across borders and time zones, and was able to raise millions of dollars for many multifamily syndication deals. And he did it all the way from Israel. So in short, he was a legend in our multifamily mastermind group. I was fortunate enough to eventually meet him about 3 years ago. And shortly after meeting Rafi, he extended the most gracious invitation to me. And that is, he invited me to co-sponsor with him on a much sought after deal in Atlanta, which he had under contract at that time. So never having raised a penny in my life, Rafi was gracious enough to coach me and to provide me with resources to get me started. And that was my very first syndication deal. I am forever grateful to him and all that he has done to help me get to where I am today. So I'm incredibly honored to have him as our guest today to share with us his own incredible journey and his perspective from being an international multifamily syndicator. We are delighted to have you here, Rafi. Welcome.
Thank you. I'm very touched by your introduction, and I forgot the impact I had on your journey when you started. It's kind of I believe in helping others. And it's amazing that when I need help, people are coming to help me as well. So it's kind of my philosophy, and I love it to see that you don't need to be shark to succeed. It's all about be with good people and helping each other.
So I know you have a very interesting story to tell, and I would love for you to tell our audience some background about yourself. Maybe what did you do before, and then what motivated you to become a real estate investor?
All right. So a small bio on myself. I'm in real estate for 13 years. I did for 2 years I bought in Israel. And then started buying in the state, single family home. I did over 300 transactions, over $20 million in value. And then I shifted to multifamily and did 766 units and in over 6 deals. And I'm under contract for 210 units, which is 26 million. It's the biggest thing I've done. But it sounds flashy and amazing, but it's a journey. And I actually didn't start this way. I didn't born for in real estate, and I actually started like most people. I was an employee, and I thought I will get rich through being a good employee, hard employee. And I actually proposed my wife on Friday, which is in Israel. Is the weekend, knowing that I'm in a good direction in financial. And on Sunday, when we get back to work in Israel, we work on Sunday to Thursday. They called us and told us that they are closing the company. So it's kind of it's a funny, not funny story. And I was looking for a job for half a year. and frustrating. I was frustrated. I didn't find a job, and I read Rich Dad Poor Dad and decided I gotta do something, and I'm not gonna go back to to be an employee, and I want to build passive income, active income, and be financial free. So that kind of started with the end instead went to to the start. But I bought in Israel a few houses, and the market in Israel is expensive, really expensive. I don't know if America knows how lucky you are to have sophisticated real estate, that simple people can do big things. Like I can imagine if I was trying to buy in Israel $26 million deal that I will be able to pull it off. I think it's something is more capped for rich people or people who have more come from rich families with reputation, etc. So there are so many strategies in America, and once I understood that, I started buying houses from Israel, and I kind of did it by building teams. I early on understood that if I would try to do everything by myself, I will need to live in the state. I will need to understand how to renovate by myself. And I said, I don't want to do it. I want to build a system. I want to build a team that will do 90% of work, and I will do 10% management. That is my philosophy. And I always thought that big companies, what they do, they build a business, so not work. So that's kind of what I've done. And when I moved to multifamily, I did the same. I kind of first joined a group, learned how to do it, got like a big brother or mentor that will help me, and started the journey again by building team and oversee it from Israel. That's kind of my background story.
Great. Thank you so much, Rafi. And so I think, some of our investors who are foreigners might be interested in knowing a little bit of detail, like how exactly do maybe foreign investors invest? How do they buy properties in the US? Because I know you have that coaching program where you help your students buy single family properties in the US. And I wonder if that's similar process as when they invest passively in the multifamily syndications.
So, well, so investing passive in a single family home, it's not the same as investing passively in a multifamily. I think, but there are some similarity. You need to, in single family, you got to know your defense is by first making sure you're going to be the owner. That's the first thing you're going to do, right? That's the frauds and etc. That's the first thing that you need to be careful. But the second thing, which is most important, is to buy below market value. Meaning, in a house is worth 100, you need to buy it 70, 80, including all costs. That's your defense. Because then if you go and rehab and instead of 20, it's now 25, so you will make less money and less profit, but you have a defense. In multifamily, the defense is different. There is much more complicated components that need to be taken into consideration when you do that. But you still, in single family, you need to know how to know the comps, how to know what is the value of the deal, how to estimate rehab. As a passive investor, you still need to do it. As a passive in multifamily, there are more components you need to look at, but the strategy is the same. You need to understand the process, you need to understand valuation, and also due diligence on people, which is always right. You got to do due diligence on people in the single family contractor, for example, or in the multifamily operators.
Okay, and so I'm sure it is a much more involved process investing in the single family space, similar to being in the US. Even though you're in the US and you're buying properties in the US, it is a much more active role that you play. And so I imagine, are your students more attracted to kind of investing passively in the multifamily space now that they know about it through you? Or do they
No. I actually teach them how to be active.
Mm-hmm. Oh,
I believe
okay.
in single family. In single family, you need to be active. That's what I believe. I call it deal maker. That's my name of the company in Israel.
Okay.
But so I teach them how to be active. And the way is also you got to have, I called it, you need to have an agent who is a prince. I call him a prince. And the reason I call him prince, because you probably need to kiss a lot of frogs until you find him. But once you find him, he knows how to evaluate innovation, he knows comms, he will do the extra job, extra work to make it happen. You know, he will oversee the construction and make it, you know, help you or do most of the work for you in order for that to work. So, you know, once you find this guy, this agent, you have, you can move very fast, but you still need to know evaluation. You still need to know the right process, but it's more active. I can't say active because you're not gonna, you know, break a wall.
Mm-hmm.
Right?
Not gonna swing
You're
any
gonna do
hammers.
everything from the phone, and email. So yeah,
Right.
it's active but really passive.
Right.
But one key component that I think our audience need to understand is that I believe, and people always ask me, how do you do it from Israel? How do you do it from Israel? It's crazy, and I always say that Americans have no excuses if I'm doing it from Israel. But the fact is, it's kind of the same, right? If somebody lives in California and buy in Cleveland, Ohio, a house, okay, or do a multifamily syndication or do it by himself, what is the difference if I live in Israel? It's still, he needs to fly, I need to fly. So my flight, the only thing is my flight is longer, but you know, same thing, no difference.
That's an interesting perspective. It is a bit longer, a little bit further away, but you still need to have, like, you know, the team in place, right, to help you execute, because
Yes. And
multifamily investing, it is a team work. And even single family investing, you got to have a good team on your side, like a good agent who knows what they're doing in that
right.
market. Yeah, so
Right.
I get it. So now that you're in the multifamily investing space, what can you tell us what roles you play in the syndications today?
Yeah. So I believe building business from ground up, meaning you got to understand each role, do it for some times, and then start building the team that will replace what you have done. So I've been, you know, I'm the one who did underwriting, relationships, money raising, asset management, you know, all the roles. And you know, now I have more teams in place to, first they more, I don't know if to say professional, but they are more dedicated to one role, so they should be better than me, and that makes me like a manager, and I understand the conversation with them or what they need to do in order for that to work. So I'm actually, you know, instead of spending some time in doing this role and sometime doing this role, and sometime now I have more time to oversee their work. So that's kind of, and I understand how to do it.
And can you tell us like what kind of like what team members are essential or critical to making sure your business is successful, and whether those individuals are located in the States and whether they're located in Israel?
Yeah. So first of all, I think the first thing you need to have is a good management company. In every buy and hold, you know, strategy. It doesn't matter if it's a duplex, triplex, 10 units, 200 units, it doesn't matter. You need a good management in place. So you need to do the right vetting for that component. Now, right management company, it's like I said, it's like an angel, like in the single family, when you have a prince agent, this is the same on the management, because the management has a big role in the underwriting, in, you know, touring the properties for you, and then of course executing the plan, right? So first of all, that's a management role. Second is underwriting. So I used to do underwriting myself, but it takes time. Now I have a full-time underwriter and analyst is underwriting 2 to 3 deals a day. And that makes us, you know, vetting more deals, and it's actually creating more relationship with the brokers, because the brokers see we are very serious, right? Because we underwrite every deal. So that's another crucial team member. Also, asset manager role. Asset management role is the role where you supervise the management company executing your plan and making sure they're executing the plan. So I used to do it, and now I have somebody who is that his job, and he's doing it for 25 years. So that's another crucial role. Another role is the construction management. Usually, a management company will give you the will give you that for free or for payment to do the construction management. But I think it should be one of the key components that roles that need to be outside, because it's like in the single family space, I tell my students, when you buy a house, go bring an inspector that is not familiar with the agent, the contractor. It's an outside role, right? Same thing here. The construction manager should be outside and need to supervise the construction. So that's another role I have. Money raising, still don't have anybody in my company for doing that, so I'm going to do it along with others. But that's something that I will work on to bring into the company to do it.
Okay, thank you so much for being very comprehensive and explaining what each of those roles are to our investors. And so I know that you've been involved in a lot of multiple deals, and you have over 700 units right now. And I know that every project that you're on is unique, and that there's always something that you can learn from each one. Would you please share with us some valuable lessons that you have learned from each of these past deals?
Yes, of course. I think one of the key lessons were working capital. So when we, let's say we have a plan to renovate 6 units a month, right? And we need to replace roofs, and we need to plan how much money we're gonna spend as a deposit, right? Because you need to put deposit for the renovation. Once the renovation is done, the lender will give, will reimburse, right? Whatever working capital, if you agreed it with them, and also will pay the contractor for finishing the job. Now, some contract will tell you, listen, I can't wait, you need to pay. So if you don't have enough working capital to renovate units and outside, and have a clear plan for renovation, you will not hit your pro forma, right?
Yeah.
Was I clear, or
no, that makes sense. You got to have money set aside, right, to pay the vendor so you can continue working, because that money's being held up by the lender. The bank is holding that money, and until, I know that they have to do their inspections as well before they release their fund to you to give you more capital to continue your renovation projects. So that's one very helpful hint. And the reason why I ask you this is because, even from an investor's it's helpful to us to know. And then also from an investor's perspective, I want them to be smart and know what to look out for when they are looking at an investment opportunity. So that's why I can ask you this question on maybe what are some of these
making sure there is a working capital set aside. And usually people, syndicators are, they put like 10%. 10% is not enough. I think 10% is very low. I think it should be 20, 25, 30%. And there is a trick. And when I say trick, is not something fishy. I mean, there is a trick. You can raise the working capital, right? Have it until you finish most of the job work or whatever. And once you finish all the rehab that you need, you can reimburse it to investors, so they get return on investment and get return on, get some of their investment back. And now their IRR and of course cash on cash and everything is higher. So it's a kind of something that you can plan on doing it, or you don't have to put it on the plan, but in your, in your plan, not in the business plan that you show investors. In your plan, do that, and it will help, help the investors to get some funds back, because you don't need 30% just sitting down. But that's really depends on how you structure with the lender. Is he gonna, every time the job is done and the inspection are coming, is he gonna reimburse your working capital too? If not, then then you are not using all the funds they say they will give you. It's really tricky part that I didn't notice before, and now I know that.
Right. Yeah. You wouldn't know that, right? Like you said, but once you kind of see the deal through from beginning to end, you really see, what makes a deal really strong. And that is having a good amount of liquidity set aside for the contingency, the working dollars to do the renovation with. Because I guess with a lender, they can hold up your money for any reason that they want. So
True.
yeah.
So that's one. Another thing is interest reserves. The first year is a year where you have a lot of unexpected vacancy can go down, and if you don't have an interest reserve, even though the let's say the lender is not asking for that. So once if there is a drop in occupancy or something that you're not, you don't have enough funds to pay for the interest reserve. So you're gonna get you will use your cash flow, etc. And then you're at risk. So one of the things I think to protect ourselves because who knows what will happen, inflation, a new, I don't know, Corona will hit again. We don't know. You got to have enough money aside to pay for interest reserve. Although, let's say our borrower is not asking or the lender is not asking, you still need to do it. That's why I believe.
What's a good amount of interest reserve, you think?
I don't know. Think 6 to 12 months. I think that's what I would, I'm doing.
Okay. Yeah, no, that's great. I love hearing that, these extra precautionary steps that you are doing, just making sure that you have enough money to set aside for paying interest, for paying the renovations. Those are all things I have seen come into play that causes issues on properties. So those are very good lessons that you've learned. Thank you for sharing that. And then I guess you mentioned coronavirus. So, with COVID happening, it did create a lot of material and labor shortage in our industry. And it also brought along with it the eviction moratoriums, which posed a lot of challenge for operators during the past 2 years. So I guess, on your prior projects, how were you balancing the COVID issue? Because, a lot of these properties you invested in happened before COVID started, right? And so I imagine, the operations at the property got impacted because of eviction moratorium and then labor shortages, material shortages. So how are you balancing those COVID issues in your budget with the expectations that you gave to your investors?
Yeah, so one of the main things we have done in all the project is stop distribution. Well, you don't want to have distribution and have a lower balance in your bank where you don't know what, where we didn't know what will happen, right? We didn't know where it will end. So stopping the distribution is a hard decision because investors who are also listening here, they want to see distribution. Sometimes they they don't care, right? I want to see, money in the bank. And that's reality. And I understand that investors, that's why invest. We want to have return, right?
I think a lot of times it's kind of how they measure the success of the project is whether they're getting the distributions or not, since those are coming in like real time, the equity that's been forced into the property, they don't really get to see that until a refinance or a sale, right? But then in the meantime, if they're not seeing distributions, it makes them worry that things are not going well.
True. And I got calls like that. And what I always explain them, listen, the project is more important than any of us. Meaning I can do this. Let's say I'll roll with you. I will make a distribution. Okay. But what will you tell me if I will if I call you in a few months and tell you, listen, we need to call for money. There is not enough money. We need money.
Make a capital call.
Capital call. What do you prefer? Capital call or having distribution?
And what is the capital call? Just so that, you know, anybody who
capital call is where you don't have enough funds in your bank to pay for the interest and principal for the bank, and then you need to call for, you know, how do you call it, investors to bring more money to the deal. And whoever not investing in the deal, then his percentage are, how do you say, going down. It's not a nice situation for sure. Never been in this situation, and I don't want to be in this situation. So I prefer not doing distribution. Without saying, what I told people is check the performance. See what the performance, and is it reasonable to the situation? Meaning, you know, are we operating? What are the steps we are doing in order to keep this, you know, and I said, keep this property performing with the situation we have with COVID. So what we did, we always said we were calling agencies to. We were the first one to call agencies and getting the CDC payment, you know, so we will be able to compensate on the tenants who cannot pay, and they were paying for them. So we were showing actions. And also I said, if there is money in the bank and we are not distribution, that's yours too. So check that, right? So who cares if it's in your bank or in the project bank, as long as it exists, right? So you can calculate if we do a distribution, how much you make, right? So that's what happened last year when we, you know, COVID was controlling everybody.
Right. So for the most part, how was your investors' reaction when you told them this?
I think most people understood. Some of them didn't. And you know, I told them to be patient, and you know, now we're fine, right? We're fine. We're also selling some of the deals, so you know, they're happy. So yeah.
Okay, that's good. Yeah, I think over time they slowly see that there's still a lot of value that's been created in the property, even though they're not seeing the distributions, or there's still equity that's being forced in there over time, and the cap rate is compressing, so that's helping a lot too in a lot of markets. So yeah,
I keep saying that our job is to be patient. And patient with investors. You know, I totally understand that, you know, they invest money. Some of them are most of their money in deals. So, you know, they're worried, or sometimes people are worried. So we need to be patient and you know, give the explanation the best we can, and you know, and that's it.
Very good. Thank you. And so I guess the other side of that is, you know, aside from the investors, the labor shortage, right? There's a labor shortage caused by COVID. And so how exactly are you dealing with that, with the labor issue from being so far away?
Yeah. So first, when I'm looking for contractor now, I'm looking for contractors who are have some supplies connections. That's one. Management company, if they have supply connections. And I also budget more for renovation than before. I see operators who budget $3,500 for premium renovation. I don't think it will happen. It's 2 years ago cost. Now cost went up, and you need to be prepared. It will even go higher. So in my deal, in the current deal, I budget $10,000 per unit for renovation, which we should be around 7-8. But you know, I want to be prepared for inflation, and if something, we need more money, so we have it. But gotta remember, there is a balance here to have a lot of, being more conservative, have more money from the lender and paying for that, right? But with rate so low, 3.5, I prefer having how much, let's say 200 units, multiple 2,000 buffer, it's about $400,000. With a rate of 3.5, I would take it. Right. Makes sense.
Yeah, definitely makes sense. And so, you mentioned that you do have another project coming up. And so based on what you know now, you mentioned, based on your lessons learned, what you would do differently. On an operations perspective, do you have anything else that you would do differently on your next multifamily acquisition, based on what you've learned from your prior projects?
Yeah, so I try to implement every lesson I had. So working capital, interest reserves, working capital process with the bank, making sure it's we understand it and tweak it so they understand, and roles like construction manager, asset manager, and things like that.
Got it. So I guess, for renovating your properties, I think you mentioned earlier how having a construction manager, you're using a construction manager to help you on top of having the property manager's eyes on it. And so, yeah, one of my questions was like, how are you specifically overseeing that the work is being done correctly to the standard that you expect? Because obviously you can't hop on an airplane and go visit the property every month.
True. Well, I would probably will come more often, but I will not check. I will not inspect every unit. So the construction manager. So we're going to have a scope of work. The scope of work we will try. We are working on that to have labor and materials. That's one. Then we will have like a budget, like a plan. What we're going to do every month now. When we're going to do each item, so we can make sure we have the funds to do it, and with the reimbursement and etc. And then every unit we're going to have like every unit that are done, there will be picture for every unit, and we're going to document every one. We're going to have like a list of like an inspector, a list of items that are open, because sometimes they will finish a unit because there is a pressure for tenants that already list up, and the tenant will come in, but there are open items. Somebody need to make sure that they are, those open items are closed. So we need to have the construction manager should have like a list of an item for every unit and making sure it's closed.
Okay. Yeah, no, that's great. I think that's a great idea to have a construction manager. A lot of properties I know don't have that. And, you kind of rely on the property manager to walk the units and give you their feedback. But, you never know if they're cutting corners or not. So it's good to have another third party's eye on it as well. Yeah, that makes sense.
Yes.
Great. Thank you. And so I guess, we can try to wrap up the webinar, the interview, but before you leave, I want to ask you that, having been in this space for many years and having played many roles, what advice would you give to our investors about what is the most important thing to look for when choosing an investment opportunity to participate in?
Okay, so of course, operator, it's something you need to check. Track record, how many deals, how many of them they were active. I think their personality for sure. Ask around people how their experience with this operator, especially when things went wrong. I think if any operator would say everything was fine all the time, no way. So I think due diligence through people is very important, but try to reach out to people that are, and ask them. When I do due diligence, I always ask, what are the good things and the bad things? Because there is always good and bad. So I will do due diligence through people mostly. And then, So it's a reputation. And then I will underwrite a deal. First thing is to check the area. You can use a free website to know how much the median income in the area, right? For a family. So if it's a 20%, $20,000, it's not a good area. If you see it's a 50, 60, you know, it's a B class area or B minus, right? So you can have that for sure. You can check traffic in the area from the internet. You can check job growth, shopping centers and etc. in the area. That's one. Then look at the rent growth used. I've seen before people are using 5% rent growth, 6% rent growth. That was history. I don't believe it should be done more than 3, 4 the max for rent growth. Check the cap rate. What are the cap rate for the exit? Some people use an exit cap rate which is lower than the buying cap rate or the market cap rate. So kind of go deep on the underwriting. One more crucial thing, which is the main driver for a successful deal, is to verify the rents, the pro forma rents, whatever the operator thinks he can push the rents. Check that there is a proof for those rents. Don't say, oh, this one is a 2000 build, yours is 1975. And they are getting 1,400 or let's say 2,000, and you say, oh, I can get 1,500. Why? Because they are very new and ours is not. So people will assume something. Don't assume. Use a reverse engineer for what's going on inside what's going on actually in the market or proven concept in the deal.
Right.
That's
so yeah, no, that makes a lot of sense to verify pro forma rents, make sure you can achieve those type of rents after renovation is completed. And it sounds like a lot of work to do all this, due diligence, on the side. But just to put it out there that, whoever you're working with, whoever the sponsorship that you're working with, typically they would have that information. And I know you don't want to rely on information that you get from the person who is working on the deal, but I think, they might be able to point you in the right direction and kind of give you what you have. And then you can look at it, verify that you agree with where the information is coming from, that it's accurate. So I kind of like a little tip to making it for a little shortcut to making that due diligence process a little bit shorter and easier.
Yeah, and rents are easy to verify because you can type, in Google, type the name of the property you're looking at, right? And then open it in a map. And in the map, you can right click on the pin you have on the map, and there is search nearby, right? You write down apartments, right? Once you write apartments, you see all the apartments nearby. Now go to each one of them and to their website and see what they're asking for rents.
Right. Yep.
That's simple.
Well, it's simple because you know it so well, Rafi. Yeah, no, but that's a really great tip. But yeah, thank you so much. We really appreciate your time spent with us today. And I just want to share with everybody your contact information. Can you guys see my screen with your contact information?
Yes.
Okay, yeah. So yeah, if you guys have any questions, Rafi, we welcome them to connect with you, correct?
Yes, of course. I will gladly help anybody who needs an advice, look at a deal. I will glad to help.
All right. Well, thank you so much. Yep. So here he's the founder of Proud Communities, and his email is at rafi@proudcommunities.com. So
thank you very much.
Yeah, thank you very much for your time today. And we will be sure to send out the replay after at the end of the day today. So we appreciate your time, Rafi. Good luck on the next deal that's going on right now.
Thank you.
And yeah, we wish you the best.
Thank you very much. And I wish you guys the best. You are great people and great operators.
Thank you so much, Rafi. Likewise with you. We love how conservative you are and how well you think through everything on the deal, and that you really implement things that you've learned from the past into your new deal to make it stronger. So really love that.
Thank you.
All right. Well, thank you so much. Have a good rest of the day. Have a great weekend, everyone. Take care.
Bye, everybody.
All right. Bye-bye.